And then the CPA. So this is where the accountants and the auditors step in. And so the CPA is supposed to be providing an assurance that the accounts and transactions have been presented in accordance with the accounting standards. So they're in compliance with that. The CPA or the auditor is not guaranteeing that the business is not committing fraud. So a business can commit fraud, not hide it from the accountant or hide it from the auditor, and the auditor is not responsible for that. They're supposed to try to uncover fraud and make sure the accounts are accurate. But if the business actively deceives the CPAs and the auditors, there's not much they can do about it. CPAs also offer services in terms of tax. They used to offer services on management consulting, although that business has been eliminated by Sarbanes-Oxley. So accounting firms used to be an accounting firm or audit firm, a tax accounting firm, and then also management accounting. But the management accounting was the most profitable part of the business, and that big business may have caused the auditors to not be independent. And so, at least in the U.S., the regulator said if you're an accounting firm, you can't also be a management consulting firm. You have to divide them up. And so they split them off. Each state has its own board of accountancy in the U.S. So it's all state regulated also. In most countries, there are national boards of accountancy who regulate the whole country's accountants. U.S. is different in that way. So the U.S. regulates accounting and insurance at the state level. Yep. Is there a number of women? Yeah. So there is no legal requirement. So there is pressure from society or whatever to make the boards more representative of the investors or the society as a whole. But you certainly see, especially in the technological businesses, that women certainly were very rare. And there were many businesses that had no women on their board, or most of them didn't in the technology sector. And so that is changing. In terms of having someone who is an expert on the board, no requirement necessarily, but almost always one board member will be a lawyer. So they always have at least one lawyer there. Maybe one with an accounting background, because the board also supervises the audit and the accountants, and but no legal requirement. And in the U.S., the regulator for accounting is the Financial Accounting Standards Board, also known as FASB. And they're the ones who establish GAAP, which is generally accepted accounting principles, and they issue financial accounting standards, which are these FAS. This is a U.S. based, and the FASB or FASB does this in conjunction with the Securities Exchange Commission. Once again, remember the purpose of this regulation is to protect public investors or public debt holders, public stockholders or debt holders, and give them information so they can evaluate their investment or decide on whether to buy bonds in the company. So the FASB works with the Securities Exchange Committee. This is a industry regulatory board. The SEC also has to agree on any kind of accounting for public corporations. And so they work together and generally do not disagree, although FASB is generally more favors regulations, whereas the SEC may not favor regulations for political or business reasons. So they tend to be more wanting a pure accounting treatment. SEC, a politically appointed board, and it's very sensitive what businesses want. And then for international accounting standards, you have the IASB, International Accounting Standards Board, and this is an association of about 120 different countries who all come together to try to create a system of accounting regulations that will be applied globally. And so in general, this is the most number of countries use this system. It doesn't mean that they all use exactly the same rules. It's just they base their system on international accounting standards, and then they may have certain variations, which would be the local GAAP or local accounting standards combined with international accounting standards. But this is considered the most advanced accounting system, and we'll see a little bit later. Generally, with U.S. accounting standards, it's very rules-based. There are very definite limits. You can only do this, you can only do that, you can only have this percent or so. But with international accounting standards, it's more qualitative, more judgment. So it says, what is the economic substance? You need to represent that economic substance, and you have discretion about how you do it. You just have to do what you're supposed to, but we're not going to tell you exactly how to do it. So this is more general guidelines, economic substance, U.S., bright line rules, limits, very